Let me go even deeper into world economics right now. All of this maybe plus AI plus Bitcoin and blockchain. We now have a very, very interesting, I guess is the right word for it. I don't know if interesting is even good enough. I think maybe a shocking set of assets around the world. We've got gold just going crazy, and silver has finally caught up. Well, maybe not caught up, but silver is now catching up. So gold and silver going crazy. Bitcoin, after going crazy for 10 years, now seems to be flatlining, maybe going down as gold continue. Well, for a week.
But easy.
Is that,
Yeah.
but again, as gold though continues way up, equities at 23, 70 all-time highs this year for the S&P after huge 2 years in a row. Now that's kind of normal for like it happened before when we had the 90s with when we had the internet going crazy. And so this would be not a shock to see it again with the AI going crazy, but it's still really, really high. We've got uh, just reporting today, Japan and England. Well, Japan's bonds have been out of whack for a while now. They've been going steady, steady up, and now England's are going up a ton. They're like at 5.5 or something like that. Do you think could there be a potential reset that might be a little dangerous in the monetary world?
Can you just define what you mean by monetary?
All those things. So you got the main thing in well, all those things. So your financial markets, bonds, stocks, silver, gold. The only thing that's not being impacted so far is commodities. Commodities are super low compared to everything else. But you got bonds, stocks, regular currencies, and gold, silver, and then the new currencies, which all seem to be. Yeah.
Uh, I would say I think you're going to see everything continue to go up and to the right.
all
Everything,
all of them. Wow.
everything. You name the asset class, and I think it'll go up and to the right, and it'll continue. I would not by any means say that Bitcoin's flatlining. It's literally doubled in less than a year. Like like Bitcoin is just not the one to pick on. Bitcoin has outperformed every asset class over the last 10 years by
A ton.
100 miles, right? So like that's not the one that I would be picking on, just because it's taking a breather. I again, I'm not a big Bitcoin guy by any means, but call a spade when you see it. Uh, so I would not touch that one. Um, I think markets react ahead of time, Randy, and you know this. Right now, we know that we've got 2 to 3 cuts planned for this year. That seems pretty set in stone at
Hmm.
this point.
Yep.
And the markets will start to price that in ahead of time.
Hmm.
I would say ignore everything that happened over this past week because, again, that was all noise going into the final week of the month. August is just is its own beast. September, keep in mind, September tends to be the most volatile month.
Right.
So be wary of that. But with rates coming down, that means you're going to have easier money out there. And that's very stimulative to economies. And when economies get a boost of stimulant, that tends to create more, just call it energy
Yeah.
in the markets,
Right.
which allows companies to produce and spend, right? And the turnover of money and investments and investing, and that creates job creation. And more job creation because more people money to spend, right? It starts to turn over and it starts to happen over and over. Um, so I think things will continue to, and there's a lot of money on the sidelines. I think will start to come back into the markets. I think you'll see bonds go down because of this. People want to get out of these more secure defensive holdings and they'll want to go back into active investments. So I think you're just going to see that whether we have a lull in Bitcoin or a lull in the stock market, I think you're just going to see everything continue to go up and to the right. And I've been saying this for almost a year now. We are in the roaring 2020s. We are. We are in this golden age. But it doesn't mean it's going to be smooth.
Right.
It's probably going to be very rocky, very uncomfortable, but it will be up and to the right. It will be. And my opinion is you want to have every dollar invested as you can, as you know, to the point of your ability to sleep at night. Right? Mm-hmm. Don't do anything stupid. Mm-hmm. Don't sit there and put a whole bunch of YOLO $1,000 Tesla call options. Right? Like don't do that. But make sure you can go to sleep at night. But I feel like we're at a point where you really want to have every dollar allocated to a growing productive asset. So yeah, I just think everything's going to go up and to the right. And when you do that too, keep in mind, that's a different situation than what we had before. There's two types of easy money. Sorry, I'm like all over the place here. I'm trying to make sure everyone understands what I'm saying. I know you do, but I just want to make sure everyone understands. You've got easy money, meaning the Fed lowers rates, so it's more advantageous, it's more digestible to take out loans to invest into your companies, even to do stupid things like margin or to buy a house, right? Whatever. That's different, easy money. That's very stimulative to the economy. It allows companies to hire more, all that stuff, right? That's great. But then there's the stupid type of easy money that we had before, which is let me give a check into the hands of every person in the country. That's stupid easy money, because all you do when you do that, you incentivize a uncontrollable flow of money turnover. Mm-hmm. And that's what will create inflation. Lowering rates, making it easy to borrow, doesn't necessarily mean you're injecting more dollars into the economy. Right? It can mean that, and it probably will. But even in that mechanism, it's not just the increase of M2 or money supply, it's also the velocity of the money. And by doing it through dropping rates or going through bonds, you control that acceleration of the money turnover. So it's not as complicated as like I'm saying it. I'm just probably not saying it well enough, but it's a lot different than just giving money to someone saying, hey, go do what you want. It's like the old thing where it's, people talk about if you took the entire, all the capital in the world, what is this, like $615 trillion, and you split up between every single person on Earth, right? So however many billions of people that is, everyone would have roughly $67,000. In 1 year, odds are the top people in the world who were the wealthiest would probably be the wealthiest people again. Right. And that's why you don't want to just give money out to people, because they will spend it and they'll just throw it away. And they'll all spend it in ways that create inflation rather than strategically using it. So I don't know how else to say that in a way that makes sense.
Well, that makes total sense. Okay.